I'm Scott Tibbles with the Investing News Network. I'm here today at PDAC 2019. Joining me now is Gianni Kovacevic, Chief Executive of Copperbank. Thanks for joining me, Gianni.
Nice to see you again, Scott.
So, it's day 3 of PDAC 2019. How do you think the vibe has been so far?
The temperature getting warmer. I think there's clearly more people here. There's a lot more interest here, I would say, after day 3. And I think a lot of investors are probably saying they understand this trend to electrification. It is metals intensive. This is not going to be a 1 or 2 year deal. It's going to be a probably last couple cycles even, which electrification and the enablers of electrification and energy storage. So.
Okay, and so obviously you're the copper guru around here. What commodity are you the most excited about in 2019?
We'll talk about copper in a minute, but I want to talk about helium. Helium is in a boom market. I came across this, a few people introduced it to me, and then I really sat down with a helium expert for 2 hours, and it's a fascinating commodity. This is not for balloons. It's a high-tech coolant that they use. All the big technology companies, they're putting it in their servers, and they use less energy. The CAGR growth rate for helium is 7%. The price of helium in this boom market it's now trading at $279 an MCF. It costs about the same to drill for natural gas, and gas sells for $4 or $5. What a business. So I've been captivated by looking at how do you invest in helium. It's pretty hard. There's been a few startups that tried to do it. They went to other places, but there's an old adage in gold mining. The best place to find a gold mine is next to a gold mine. So the most prolific helium basin in history was on the Arizona-New Mexico border. And there's a little junior, of course, for disclosure, I do own it, Desert Mountain Energy, the symbol's DME, and they've assembled a strategic land package when helium was sleepy, before it became this commodity of interest, and they're going to drill, from 7 targets, they're going to drill 3 exploration wells later in quarter 2, and it costs $400,000 to drill one of these helium exploration wells. If they're successful, it's quick to cash flow. But once again, if they're successful, the outcome for a speculator like me, this is going to be very interesting. So the costs are low, the product is in demand, quick to cash flow, and like cannabis, like crypto, like lithium, like cobalt, they all became on the front page of the Wall Street Journal and Barron's and all that. No one's talking about helium, and it's in a boom market. If you're an investor, follow this theme. Follow helium, and you could probably follow through the news flow of the company I just recommended.
Well, that's one that we certainly don't hear much about these days. And where was that company listed, sorry?
Oh, they're on the TSX Venture Exchange.
Fantastic. And so moving on to the copper story, which you're the most known for, What has the copper story been trending like in 2019 so far? We're 2 and a bit months into the year now.
I've been saying for 3 or 4 years that it will decouple from oil, price-wise, demand-wise, the growth rate. And that's exactly what's happening. I know other people contest that. They use coefficients of math and other nonsense. Just look at a 20-year graph, put copper in one color, oil in the other color. This will continue to decouple. And oil is the dominant commodity. And if you look at 20 other commodities and overlay them to oil, they have this interesting pattern of going up and down at the same time. That's going to change. And it's because of the 4 and 5% CAGR growth rate we're going to see in copper. There's an old adage, and my friend Dennis Gartman uses this, and it's fantastic. When they raid the house of ill repute, they arrest everyone, even the piano player. So many times you can say some of these other commodities, that's exactly what was happening. Wasn't exact supply and demand and imbalances. It was really this monolithic group going up and down, the US dollar trade, the economic cycle after the 2008 financial crisis, and here we are. We are going through a hinge of history and energy, which is going to require electrification, as final energy is going to go from 20% to 50%. You don't need a pencil and paper to figure that out. The enablers of that are going to be aluminum and copper. I see demand for copper being very robust. We haven't invested in copper mines, and you know how that movie ends. There's a scramble for metal. The price, the fabricators and all the people that make things out of copper, in my view, in the next 2, 3, 5, 7 years, they will have to pay more for their copper. And so the optionality that you have in this business, a stronger commodity price is healthy. It's good for this sector, but also in Copperbank, our strategy, that optionality play really comes to the fold. Every 10 cents that the copper price moves higher, tremendous amount of MPV value for our projects that have economic studies. And we still have blue sky exploration, and we have development potential because very few juniors have 3 development copper stories, all located in the United States, all 100% controlled, and over $100 million has been spent on our portfolio to date. So that's how I'm playing Copper Bank.
And so the red metal is quite well known as Dr. Copper. Can you talk a little bit about copper's strength as an economic indicator? Because obviously a lot of people will be thinking about that going forward.
Well, that's obviously important because it is, for industrial output, it's one of the key materials. But it's changing. It's used in other applications. There's also, within the United Nations 17 sustainability goals, there's 17 of them, copper plays a very important role in 16 of the 17. It's also going to be used increasingly so in the health of society. We know that it's antimicrobial. It's going to be used more for example, for fish nets in the aquaculture business. It's going to be used in hospitals for countertops and handles. And most importantly, when you decarbonize the energy mix, when you take the emissions away from energy, that's electricity. And that electricity demands copper. And when it's deluxe forms of generating electricity, like wind and solar, 4, 5, 6x more copper for each application per megawatt. That's very robust for the red metal. So I think it wins across the board.
And so when an investor is looking at copper, its price, its supply and demand, can they derive information about how well the world economy is going?
That's the old rule book, and it's still relevant, of course. Like what we saw when the trade tariffs were implemented in June, anyone that is buying copper to fabricate something, they bought less. Globally. So of course, then the price came off. But now many of these people are going hand to mouth. So even with tariffs, you get back to business. You still end up with a deficit. Now, it may not happen in 3 months from now, but because of this underinvestment, once Cobre Panama is commissioned this year, we don't have any major mines over 100,000 tons coming online until 2022. Also, 2018 was the luckiest year in a generation for supply disruption. It was less than 2%. Where the average for 15 years was 5.5%. We're not going to get that lucky year after year. We already know that Grasberg will not produce very much copper this year. Market yawned. Well, one more major mine has something like that happen. Market won't be yawning. All these fabricators are going to have to trip over, guess who? Speculators. And that's why you have these prices that actually go beyond fair value, perhaps. Like some would say back in 03, 04, 05, when copper went from 80 cents to $4. That wasn't straight fundamentals. There was a little bit of speculation in there too.
Okay, and just so wrapping up now, looking forward to 2019, what would be your top tip for investors?
My top tip for investors? I think you want to look at helium. When you see helium for the first time on the cover of the USA Today, it'll be too late.
Fantastic. And we'll wrap it up there. Once again, I'm Scott with the Investing News Network, and I've been having a chat with Gianni Kovacevic. Thanks for joining me, Gianni.
Thanks, Scott. We'll see you again.